This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to episode 183 of the Bitcoin Bulletin Podcast. This is going to be a short, tight rip. We're going to call this the Hurricane Milton episode, unless I think of a better title, because we are directly in the path of the eye of Hurricane Milton. It is bearing down on Florida as we speak. It was previously a Category 5, 180 mile per hour hurricane. That's 289.7 kilometers per hour, for those of you that don't do miles per hour, with a barometric pressure of 897 millibars. An extremely strong storm. In fact, it was the most rapidly intensifying hurricane on record at the time, whipping up from almost nothing to Category 5 in 30 hours. And like I said, we are directly in the path of the hurricane, so we're going to be hunkering down. It'll be arriving in just hours. I think the eye isn't supposed to be here till tomorrow morning, but we're going to start getting just lashed here in just a few hours. I am not in the studio today. I'm getting ready to evacuate off of the barrier island because I'm on an island, and it's not good to be on an island in a hurricane. We're on the opposite side of Florida. It's going to hit the Tampa area, south of Tampa, probably on the Gulf of Mexico side of Florida, the west coast of Florida first. And they're really going to get the brunt of it. They're talking about 12 or 15 feet of storm surge there. That means 12 to 15 feet of water above normally dry land. And they say when a hurricane's coming, you run from the water and hide from the rain. On this side of Florida, the hurricane's going to have weakened significantly. It's only going to be maybe a Category 1 or Category 2 hurricane by the time it gets here. So nowhere near as catastrophic, but still way too dangerous to be on the barrier island. My house is 2 feet 6 inches above sea level, so less than a meter above sea level. And the storm surge here is forecast to be between 3 and 5 feet. So my house is going to get wet, probably. I mean, it's not the first time it's flooded since I've lived here. It's flooded for 3 of the hurricanes I've lived here through. Not significantly to where everything we owned was destroyed, but, where you have to pull up the carpet and dry things up. So hopefully that won't happen, but it probably will. And fingers crossed, knock on wood, hopefully that's the worst we get out of this. I'm as prepared as I can be. My business, which is a little bit closer to the beach, is boarded up securely, although it's in a 100-year-old building. So I'm kind of worried about that because it's obviously not built to the hurricane codes that kicked in after Hurricane Andrew, where you have to have a home built to withstand a 155-mile-an-hour hurricane. But nonetheless, I wanted to do our DCA Wednesday stack before I head to the shelter. So this is the last thing I'm doing. I just did the final preparations. I was checking the wind speeds wind speeds and directions, just to make sure the side of my house is going to take the strongest winds, has a little bit of extra protection. I'm going to do this recording, and then we're going to go. I did our stack already, so I'm not going to do that in real time because I wanted to make sure I got the DCA Wednesday stack done. I didn't think I was going to have a chance to record today, or at least from home or from my studio, maybe from my phone from inside a hurricane shelter. But I have a few minutes. I'm ahead of schedule, and that's good. So before we get into the DCA Wednesday statistics, I'm going to go over the vital statistics. And this is a little bit delayed because I did screenshots of the vital statistics at the time we stacked. So at the moment of this recording, we're sitting at a Bitcoin block height of 864,925. And I stacked at block 864,921. So just 4 blocks ago. At the time I stacked, Bitcoin was trading in the range of $61,730 or 1,620 sats per US dollar. People are thinking that Bitcoin's crashing. I was seeing that on X saying, why is Bitcoin going down? And I want to remind you, that's $1,000 more than we stacked last DCA Wednesday. and the DCA Wednesday before that, when we stacked at 60,750 and then 60,420. So zoom out, plebs. Remember, I've said repeatedly that if this had been a normal cycle, had we not had the ETF hype, the spot Bitcoin ETF pump, we still wouldn't expect to retake our previous cycle's all-time high until around Thanksgiving or Christmas of this year. And it's getting close, but hey, we haven't even had Halloween yet. It's October 9th. We're more than a month away from what I said would have been the earliest time to expect retaking the previous cycle all-time high. So remember to have that, that low time preference, long-term thinking that, we're not in this to get rich quick. We're in this to not go poor slowly or quickly, as it's been recently with inflation through the roof. But even so, we're doing really well, plebs. But you're still early, and the nice thing about the fact that we're not sitting at an all-time high is we're going to get more sats than we would if Bitcoin were 75, 80, or 100,000 US dollars per Bitcoin. Bitcoin's current price gives it a market capitalization of 1.22 trillion. That's up from the 1.20 trillion last DCA Wednesday. So again, while people are lamenting that the price of Bitcoin is down this afternoon, it's up if you just zoom out, and the market cap is up significantly as well. I mean, 0.2 trillion, 0.02 trillion, I guess. It's a lot of money. That's a significant increase in market cap. It's a big move up, and it's a move up and to the right, not a move down. For those of you who continue to value your wealth in shiny yellow rocks, it will currently cost you 23.5 ounces of gold to purchase just one Bitcoin, almost a full ounce more than it did just last DCA Wednesday. So gold continuing to trend to zero in Bitcoin terms. And for those of you who value your wealth in pizza, one Bitcoin would currently purchase you 3,452 large pepperoni pizzas from Papa John's, 55 pizzas more than last DCA Wednesday, and that is a pizza every day for about 9.5 years, which is a heck of a lot of pizza for just one Bitcoin. I've said multiple times that I don't think you could spend an entire Bitcoin on pizza if you purchased just one Bitcoin a day, because that 9.5 years from now is multiple halving cycles. I believe we haven't set this cycle's all-time high yet, that we won't even see that till next year sometime, 2025 sometime. And then we're going to have the 2028 halving cycle and the 2032 halving cycle. And the price of Bitcoin will keep going up, and the number of pizzas equivalent will keep going up to the point where you would not be able to consume that Bitcoin in more than one lifetime. And that's pretty cool. So it's really cool to know that if nothing else, you could eat for almost 10 years, about 9.5 years, one pizza a day on one Bitcoin. And while that might not be as much food as you need to feed your family, it's nice to know you wouldn't completely starve to death, if nothing else, as long as you're a whole coiner. And that's a worthy aspiration, a worthy goal for us all to attain. That metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is up a bit from last DCA Wednesday. Currently, transactions are screaming in at 7.21 transactions per second on average, up from 6.69 transactions per second on chain just last DCA Wednesday. And speaking of the mempool and on-chain activity, both the mempools that I monitor are a lot fuller than they were last DCA Wednesday. Clark Moody's mempool has 180,083 transactions. That's more than 42,000 additional transactions from last week, a 31% increase over last week's mempool volume. Mempool.space's mempool is showing 204,156 transactions, a 58,000 transaction increase, more than 30% increase in their mempool. Of course, the reason mempools are different is because everybody's mempool has different settings. For example, you can increase the amount of space that your mempool is allowed to take up on your node, or decrease it. That's a setting that you can customize. But also, Bitcoin transactions broadcast out in a web, like, radiating out like ripples in a pond. And depending on which node sees which transactions first, your node may be one of the first nodes to have that transaction, that updated block broadcast to it, or one maybe one of the last, or you might not see it at all, depending what type of filters you have, because there's nodes out there, mempools out there now that are filtering transactions to try and remove some of that mempool bloat with those ordinals inscriptions and BRC20 spam tokens. So the point being, not every mempool is the same. I know Matt Aldell likes to say there isn't the mempool, there are mempools. I think there is a mempool because I think it's a term that means the overall collective, just like, each of us sees each of us has our own life and we see the world through our own set of eyes and it's unique, but we're still part of one big world, even though there's many individuals. We all kind of collectively make up the human race. Tomato, tomato, to each their own, but I think collectively the mempool is the network, and you have your individual mempool that reflects a measure. You're like taking a reading of the mempool. I mean, you have your own mempool and you've got your own, your own node with your own record of all the blocks, the entire blockchain. But I think you get what I'm trying to say, and I'm getting on a bit of a tangent here. If you need to send an on-chain Bitcoin transaction and you need to do it in a high priority manner, if you want it to be confirmed right away, it has gotten a wee bit more expensive to do so. Clark Moody's fee estimator is saying that a high priority transaction needs to include a fee of 28 sats per VByte, up dramatically from the 5 sats per VByte it was recommending last week. And that is the first time we've seen double-digit fee recommendation from Clark Moody since the beginning or the middle part of July, so a significant increase. And they are, however, saying that if you have up to a day to wait, that a fee of just 2 sats per VByte can be set for a low or no priority transaction. Mempool.space always tells a slightly different story. Obviously, they're showing more transactions than their mempool. They also do, I think, a slightly better job of estimating fees, and they're recommending that a high priority transaction have a fee of 14 sats per VByte. So that's just half of what Clark Moody's fee estimator is recommending. And so 14 sats per VByte at the current US dollar value of Bitcoin works out to about $1.21. That's up from just 26 cents last week, so a significant increase, but still pretty cheap considering you can send a permissionless transaction to anyone, anywhere in the world, that it's going to be finalized within 10 minutes or so. It can't be censored, it can't be revoked, and you can send any amount of money, an unlimited amount of money, within reason, depending on, how much the price of Bitcoin is at the time. But you get my point that you could send billions of dollars anywhere in the world. Nobody can stop you, and it will have transaction finality within just minutes for just $1.21. And that's still way cheaper than a MoneyGram or a wire transfer, which doesn't settle that fast and is censorable. So pretty cheap, but nowhere near as cheap as it had been. Hopefully, if you were one of those people that were worrying about consolidating some smaller transactions, or some smaller UTXOs, so they wouldn't be dust, so they wouldn't become unspendable in a high fee environment, that maybe you took care of that. If not, you can still set a 2 sat per VByte transaction, and hopefully it will get mined probably maybe later this weekend when the on-chain activity tends to slow down. But who knows? That's why it's important that you do your research, you know what you're doing before you set your own fees. I know I'm not a big fan of using the auto fee estimators that come in, that are built into a lot of wallets, because they usually way overestimate. Fortunately, if you do underestimate and your fee and your transaction gets stuck, it's in the mempool, it doesn't get mined into a block, you can use mempool.space's transaction accelerator to guarantee you're in the next block, or you can use replace by fee or child pays for parent. So make sure you know what you're doing before you roll your own, as they say, when you're sending a transaction. But the mempool.space fee estimator is, again, it's saying 14 sats per VByte for a high priority transaction. They're recommending 12 sats per VByte for a medium priority transaction, 10 for a low priority transaction, and 6 sats per VByte for a no priority transaction, which is triple what Clark Moody is saying a no priority transaction should have. So if you do send an on-chain transaction and you're going to roll your own, as it may be, set your own fee, custom fee, make sure you know what the fees are looking like, and that you know what you're doing as far as your ability to do replace by fee, or at least use mempool.space's transaction accelerator if need be. Since the last Bitcoin Bulletin podcast, in fact, just hours ago, the difficulty that it takes to mine the next block of Bitcoin was adjusted upward by 4.1%, reclaiming almost all of the 4.6% difficulty adjustment, downward difficulty adjustment that we had 2 weeks before that. We are currently 1,959 blocks away from the next mining difficulty adjustment. So basically 2 weeks from now on October 22nd, and it's obviously too early to tell what's going to happen because, for example, last DCA Wednesday, it was looking like we were going to see a difficulty increase of less than 1%. It ended up being 4%, more than 4%. So that's why the protocol takes 2016 blocks for that average to make sure they got a really good idea of what the true block time is. Currently, though, those estimates are all over the place, anywhere between a slight decrease of 0.14% to a slight increase of 1.3%. Obviously, it's too soon to tell, so I hesitate to even discuss that. And again, this is only super important if you're a miner or somehow involved in the mining industry, because it doesn't really guarantee that you're going to have a 10-minute block time. I saw just a couple of days ago, there were several blocks that took more than an hour or about an hour to come in. And then there were some blocks that all came in, like 3 blocks that came in within 2 minutes. That's random chance, basically. So really, it's only important if you're mining from home or if you're a large commercial miner, especially because 1 or 2% can make a huge difference in your bottom line. But for those of us, our average plebs, blocks are still going to come in pretty close to once every 10 minutes on average. In fact, currently, blocks are averaging 10 minutes and 22 seconds. So that's fairly consistent with the 10-minute transaction. And while it's worthy of a difficulty decrease to speed things up, as I said, 22 seconds is such an insignificant, such a small time span that the average pleb isn't going to notice. Real quick, I want to thank those of you listening to this podcast in your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 and Fountain allow you to support this podcast through the value for value method, where you can either stream sats as you listen on a minute-by-minute basis, or you can send a boost, which is a shout-out via the Lightning Network. So you're sending a message, but because it's a Lightning transaction, you're also sending Satoshis, and those are both methods that you get to decide what value you want to contribute back based on how much value you feel you're getting from listening to this podcast. We do have one boost to read today, and that's from longtime supporter of the podcast, Leggy. Sent a boost for the last episode saying, Leggy sent 2,000 sats and said, "Thanks. That's the rest of what's on my wallet." Thank you, Leggy. It's always flattering to know you're still out there, know you're still listening. We do appreciate your support. Thank you for sending those sats, although I feel a little bit guilty of taking the last 2,000 sats in your wallet. So, but thank you. Thank you for the boost, and thank you to everyone listening, regardless of where you're at and whether or not you're listening via Fountain or other Podcasting 2.0 apps. And speaking of our listeners, last week we had that little bit of a change in our geographic distribution of listeners. This week it remains the same. Our top 10 countries are as follows: the United States, where more than half of you are listening. So hello and thank you to my fellow Americans listening here in the United States. For those of you listening in Florida, hunker down. Milton's right around the corner. For those of you in North Carolina, Georgia, South Carolina that were affected by Hurricane Helene, I'm glad this one's not heading your way. I mean, I don't want to get hit by a hurricane, but the last thing those people up there needed was another storm to hamper the recovery efforts that are going on up there. So thank you. Our thoughts and prayers are with you in Florida and in the states where you were affected by the previous hurricane just 2 weeks ago. Number 2 remains Argentina. So hola, muchas gracias, amigos in Argentina. Number 3 remains Germany. So guten Tag. Dankeschön, danke für alles. Danke, mein Freund, I'm tongue twister. Guten Tag. Dankeschön, danke für alles, mein Freund in Deutschland. Number 4 remains Canada. So hello to you up north in Canada, north of the United States. Number 5 remains Luxembourg. So Dankeschön, mein Freund in Luxembourg, or Morien to those of you who speak Luxembourgish. Number 6 remains Spain. So hola, muchas gracias, amigos in Spain. Number 7, this was the change last week. That is Singapore. So it was apa kabar, I believe is how you would say hello in a traditional greeting in Singapore. If you're listening and I'm wrong, send me a DM on Twitter. On Twitter, we are at BTC Bulletin Pod, or an email at bitcoinbulletin@protonmail.com, and let me know what an appropriate greeting for our listeners in Singapore is, because it's flattering that you moved into the top 10, and I want to make sure I'm not messing that up, that I'm giving you a proper greeting or a proper thank you. So number 8 remains Colombia. So hola, muchas gracias, amigos in Colombia. Number 9 remains Mexico. So hola, muchas gracias, amigos in Mexico. And number 10 remains Australia. So hello to those of you listening down under, and thank you for continuing to listen in numbers strong enough to remain number 10. And thank you to everyone listening, regardless where you're listening from. There's a few countries down there that are just barely under Australia, lurking in the 11 and 12 spot. And it wouldn't take that many friends, family members listening to boost your country into the top 10, depending where you are listening from. But regardless of whether your country's in the top 10 or not, it is completely humbling, totally flattering that so many of you are listening from so many different countries all over the world. Really, there's a lot of news to talk about, and I don't have time because storms are moving. We've got a little break in the storm right now, and I want to put some stuff in my car before the driving rain returns. So I'm going to wrap this up quickly. But for those of you who are not aware or didn't pay attention to our tweets or the last podcast, HBO was getting ready to have a documentary where they were going to dox the identity of Satoshi Nakamoto. They hyped that up for at least a week. They had the big documentary, and their claim, of course, was laughable, claiming that Peter Todd is Satoshi. And they based this on the fact that Peter Todd made what most people assume was a sarcastic reply, correcting a post by Satoshi Nakamoto. But the way it's written, HBO inferred that it was Satoshi, meaning to add on to his post saying, I'm correcting myself, but forgetting and accidentally doing so in one of his other accounts, and therefore exposing Peter Todd as the identity of Satoshi. Almost everybody, including Peter Todd himself, I think this is laughable and are getting a chuckle out of it. But that was the breaking news for those of you who were following, who might not have heard that the person that HBO was going to dox was Peter Todd. All right, on to what makes today and every Wednesday special, and that is because it's our DCA Wednesday episode, and DCA Wednesday is where we add to our stack of Satoshis through the dollar cost average strategy. For those of you who are not familiar, dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, today is our 168th stack. We started stacking weekly on Wednesdays. Every Wednesday back on July 28th, 2021. We've stacked 167 times. Our equal portion, I wanted to keep that simple so the most people listening as possible could relate to it, that we stack just $20 every Wednesday. And that might not seem a lot to you, but it's clearly a lot of money for other people. But even so, I wanted to show that just stacking as little as $20 a week over time would build you an appreciable stack of Satoshis. And I think we've shown that. Over those 167 stacks, we converted $3,340 into a stack of 9,968,571 Satoshis. And we did so at an average purchase price of just $33,505.30. So even though we stacked all the way up to the previous all-time high and then all the way back down and then all the way up to the spot ETF all-time high and then back down to where we are now, we've done so at a nice even average price of just $33,505.30. And that's one of the beautiful things about dollar cost averaging. Today, we purchased at I guess the price was exactly $61,712 US dollars. That purchased us another, where's another 31,679 sats. I had my notes a little wrong there. 31,679 sats. And plebs, that pushed us over our interim goal of 10 million sats. Our stack is just barely over 10 million sats, but today's purchase put us at 10,250,000 sats, so a little over 0.1 Bitcoin. And that might not seem like a whole lot, but we did that at just $20 a week. And, they say when we reach hyper Bitcoinization, there's going to be, on the best case scenario, somewhere around 250,000 sats per individual, but really it's going to be more like 125,000 sats because there's whales out there. There's sats that are sent to addresses where the keys are lost for, or sent to burner addresses. So in reality, the average pleb would be lucky to stack 250,000 sats when we do achieve hyper Bitcoinization. And so a stack of 10 million sats is going to put you in the it's going to make you an elite Bitcoin holder. one day. And of course, because we purchased above $33,000, today's stack raised our average cost basis by about almost $94. Our current average cost basis, our current average purchase cost now is $33,599.16. Still just about half of what Bitcoin's current US dollar value is, so not too shabby at all. And when Bitcoin does hit $100,000, which I firmly believe it will do this cycle, that stack will have a US dollar value of more than 10,000 US dollars, and that isn't too shabby considering we've only converted 3,360 US dollars into Satoshis, so almost triple the value. So instead of that $3,360 losing purchasing power, those are now converted into sats, into a hard asset, the hardest asset ever known to man, which will increase its purchasing power in US dollar terms, for example. So if Bitcoin hits 1 million, which there are those who say it will do so this cycle, I think that's probably a little optimistic. It could happen, but I would be happy if Bitcoin hit 200 or 300,000. But when Bitcoin does eventually hit $1 million one day, our stack, without adding a single extra Satoshi, will have a US dollar equivalent value of $100,002.50. That would be an insane return for just $3,360. And of course, as we mentioned, Fidelity's Jurrian Timmer said that he believes by 2038, Bitcoin will hit a US dollar value of $1 billion. And if that happens, I mean, there's no mistaking that for being the quote unquote boon for all the boon boys out there. But if it does, if and when it does, our current stack of 10 million sats would have a US dollar value of more than $100 million. $100,002,500 to be exact. And plebs, that would put you firmly in the category of those plebs that they write newspaper articles about, saying if you'd only invested just $20 a week every week for 3 years, you'd have $100 million right now. And that's really cool. All right, I'm going to wrap this episode up because I got to throw some stuff in my car and then hunker down. I'm going to be off the island a few miles inland in a big sturdy concrete building. So I should be fine. I'll probably lose power. Last time we had a big storm like this, I didn't have power at my house or my studio for more than 10 days. I think 10 days at the studio and more than 2 weeks at my house. So hopefully I won't be in that situation, but I'm really concerned that's going to be the case because, as you know, a lot of linemen and a lot of equipment, line power poles, transformers, etc., got sent up north to help the victims of Hurricane Helene. So with all that going on up there, we're going to be double taxed. It's going to be, it's double trouble with the second hurricane hitting just 2 weeks later. But I will be fine, knock on wood. I've got plenty of supplies. I have a generator. I'll be fine. I just may or may not be able to be online a whole lot until this hurricane is not only gone, but they've cut up all the downed trees and cleaned up the mess. I'll do my best to keep you posted on Twitter or X, and you really should be following us. If you're not on Twitter or X, we are at BTC Bulletin Pod, like BTC Bulletin, like the podcast, pod, because it is a podcast. And I will keep you posted as best I can. I've already, if you are following us on Twitter, you already know that we're getting ready to bug out for the hurricane. So real quick, thank you for listening. Thank you for helping feed that algorithm monster by liking, subscribing, by following us on Twitter, etc. I do like to hear from you. So even if you're not from Singapore and you're not reaching out to me to hopefully tell me how to say hello and thank you in your local language, I do like to hear from you. And it is fun to see your DMs. I do read every email I get. I do reply to every email I get. I check my email all the time. In fact, it's open right now. So again, on Twitter, it's at BTC Bulletin Pod, and the email is bitcoinbulletin@protonmail.com. Those are both in the show notes. So if you forget them, go to any show, scroll down to the very bottom, and you'll see my contact information. All right, I'm going to wrap it up, pack it up, and head out with the dog and the birds and the family. But don't forget to join us next Wednesday, hopefully. And every Wednesday, while we grow that stack together, we have to come up with a new unofficial stacking goal. Should it be 20 million sats? 25 million sats? I don't know. Maybe that's something you can DM or email me about, because we eclipsed our 10 million sat goal, but we never stop stacking. And like I said, we're going to continue to do that every Wednesday. as long as people are willing to trade their worthless paper fiat for Satoshis. Until that time, though, plebs, if you're in the path of the hurricane, hunker down and keep on stacking those sats, you sexy sat stackers.